Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Having displayed much supply this week, the Australian dollar has struggled to get out of the current trenches to the bearish case and now hovers around the key level of 68 cents. Along with that, also seen at 68.55 where the 60-day moving average is. The market is now looking closely to the dollar index, which measures the greenback strength against a basket of six major currencies. However, it refreshes its 6-week highs around 104.20 after a hotter than expected wholesale price data. The supply price, or the US January Producer Price Index, the PPI, rose by 0.7% in January from the prior month, indicating that inflation isn't cooling as quickly and smoothly as hoped. Along with that, after the second meeting, the RBA Governor Phil Lowe faces his next grilling that the market has put in terms of the fact is that how does the governor now view March in terms of do we expect another 25 basis point rate hike, which favourably is seen after the Australian employment change offered a negative 11,500 versus a positive 19,800 forecast. And recent, the prior number was negative 20,000, while the unemployment rate rose from 3.5 to 3.7%. So looking at the technicals, we can see the market is weighing on this key level, seen around 68 figure 35. Now a close under there would reaffirm the bearish trend supported by the 60-day moving average and expose the region of 66 cents. Technically, though, it doesn't look very favourable to see a bounce, so be very wary of this level in case we see a breach. The euro, well, the market has continued to weigh on the support level seen at 106.20. As I mentioned, the dollar index surges to a fresh 6-week high of 104.20. In light of the pattern, we are expecting no doubt to see further weakness into the coming session, and a break of 106.20 would reveal the next target around 105.25. Looking at dollar yen, the call since the break of 132.80.90 still holds to 135 to 136 as a positive pattern strengthens, with the ADX seen here to support the bull trend. Now getting a little bit overbought, but I still feel we could see a surge towards that top side as the dollar is strengthening. Along with that, after the PPI number, hawkish comments from the Fed officials also ignited the market concerns as Cleveland Fed President Loretta Mester said that she sees a compelling economic case for a 50 basis point rate increase. Along with that, St. Louis Fed President James Bullard reportedly said more rate increases would lock in slowing inflation, even alongside that is an economic expansion. So the case to support the dollar is coming through, and therefore the top side 136 still remains. Sterling remains weak as the market now falls into its third consecutive day and pressures this level of 119.45. With the favour of the technicals, does support a break here, and therefore would have revealed the next target of 118 figure 25. In light of the pattern, gold has reached its objective of 1,820 to 26 after posting an intraday low of 1,825. Although I am going to sit neutral from this level, we do have to view that the ADX is supporting a bear case, and a close under 1,820 for those trading may reveal the next objective, which is seen somewhere around 1,786 to 88. As the technicals are remaining relatively heavy. The reason why I'm sitting out is the fact is that we are oversold and therefore could see a bit of choppiness into this current level. Finishing up with oil, well, as we can see, the market still remains pretty much pressured on this key level, which is seen around 76.90. A break here would expose the region down to 75.60.80, but a bounce is anticipated, and therefore from the 75.60 looks towards the region of $80 to $82 a barrel. Well, that wraps it for the week. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.